All right, so we're back in the after show here with Alex. Welcome back here. And so, Alex, listen, I wanted, obviously, Kevin so rudely interrupted me when
Yeah,
I was
that's
just
me.
going to get talking about gold. And what I really wanted to circle back and listen, what I wanted to really put context on your message, at least what I got from it, and you can either confirm or deny or give a different perspective. But for me, what the one thing I want to put into perspective is when you're talking about the 6 year consolidation on this chart and this period where it's been just trading sideways. I wanted to really emphasize that this, even though it's exciting that this is breaking out, we're talking here about multi-year trends, not about what's going to happen in next 1 week. And I think just the one thing that I really wanted to say is that everyone who thinks it's all going to happen between this week and next week needs to calm down. Like I think that you're onto something in terms of the fact that the gold market is turning, but it really, I think that if this is the real deal, that this is something that will be with us for the next several years, and it's not all about the month of July and the way it trades in gold, rather how it plays out over the next half year. What's your take on that?
Right. Yeah. No, I agree with what you just said. I mean, so we've already had a huge move, right? And there's a number of things if you look at. I mean, short-term volatility in gold spiked to extremely high levels. We've seen a lot of hot money flows into gold over the last few weeks. So there's a lot of FOMO, a lot of people chasing. I don't like to see that when I'm long something, right? Because that makes me scared because not everybody's going to get rich. It's not that this game isn't that easy. So if there were a lot of people that were talking about this breakout, and they were in disbelief and thinking that this is going to be a false thing, that would make me feel a lot better. I also don't see a lot of uber bullishness, but I would say it's kind of mixed, leaning towards the bullish side. So because of that, I would expect to see some consolidation, maybe an extended retrace to shake out the weak hands. And so I'm definitely not buying here. We were lucky enough to get in a little bit earlier, and so I'm going to sit and be patient with this thing. And if it ends up reversing a ton and it ends up being a failed breakout, I'm a trader, so I'm not like married. I'm definitely no gold bug. I don't want to give you guys an impression that I'm a gold bug because that's definitely not the case. It's just like I trade what I see. And the current environment, the narrative makes sense to me on why gold would do well, and the technicals, look good for like a brand new major trend. But like you said, Patrick, it wouldn't be out of the ordinary if we see kind of a sizable retrace here to shake out those weak hands. So it's maybe not the time to go chasing into it.
Yeah.
Okay, so I'm going to jump in here, Patrick. It's Kev. So, Alex, I see in your biography that you are ex-military intelligence specialist. I just, when I
Yes.
hear that, like, I don't know, like, we don't have those kind of positions in Canada. I saw our army go by the other day, and it was like, it was basically all four trucks. So we
Oh
don't
my
have.
God. You're gonna get shit on by
I know, it's
somebody
okay.
in
I'm just
Canada for
kidding. I'm
sure.
kidding. You know what? Our army is awesome. So, anyways, why don't you tell us about your experience with the military intelligence? What is that, a military intelligence specialist? Give us some good stories. I'd love to hear what you're allowed to talk about.
Yeah. So I did various things over my military intelligence career, and I worked kind of the full spectrum of the intelligence process from collection, where you're going out actually gathering the intelligence, to interrogation. I worked as an interrogator for a little while, whereas it's like in the movies, but with a lot less yelling. So you just talk to people and try to pick their brains and get them on your side, basically. I did that. Then I did analysis, counterintelligence, both in the military and for a couple different intelligence agencies for the U.S. government afterwards. And then I did execution on this intelligence, working from the standpoint of as a scout sniper and different tactical operations.
So,
Nice.
so I heard execution. I didn't like that, but
not not that type of execution, but occasionally.
and so the interrogator, just to kind of figure out what they're thinking and stuff. I kind of feel like we need you to figure out what Patrick's thinking sometimes, because the stuff that goes through his brain is just like I have trouble, and I need an interrogator to help me because it's just some stupid shit. Anyway, so how do you find that stuff works and helps you with your current career as kind of working in the hedge fund or the macro environment? Like how do you use those skills that you learned there to analyze markets, and is there any overlap at all?
Yeah, I mean, sure there is. Like, I don't want to overemphasize like the point because they're two totally, completely different jobs. I mean, maybe doing the analysis part, because it's similar to analyzing a trade and stuff like that. You have to really try to be aware of your biases, and try to find out where your blind spots are, and then objectively look at the data, because it's huge. I mean, analysis, doing intelligence work is a really messy business because there is no black and white. It doesn't exist. So it's just a bunch of shades of gray, and that's the world that you operate in. And so I would think that from that standpoint, that's probably the biggest carryover that's. I would say that applies to working in markets and trading. And then obviously it's just to be stubborn as hell and like bullheaded and just keep on like banging your head against the wall and like until you get to where you need to go, because you kind of have to be that in both lines of business.
Right. So why don't you tell us about macro ops and like how you found? I see that there's Tyler and AK. Like, how did you guys come together, and what is it? What are you guys trying to accomplish with your firm?
Yeah. So we met 4 years ago working for another, which is now defunct, macro research firm. And we just became really good friends. I left to go join a hedge fund after that, and we all kind of went our own ways for a little while. And then we were just all getting tired of working for other people, and we decided to stop and start up a markets blog. And that's basically what MacroOps grew out of, is just trying to create a site with stuff that we really liked, but we couldn't find on other places. And so now we're kind of like a whole full suite research service. We have an internal forum where we interact with our other members. We share trade ideas. We do a lot of education, talk theory, and stuff like that. And then I write a weekly and monthly just macro newsletter. And the team has grown over time. We brought on this other guy, Mr. Bean. He's our value guy. We have a systems trader, Christy, who's also a former Marine. So it's been a fun ride so far.
That's cool. Now, are you guys all over America, or do you guys all live in the same place? Like, where are you guys located?
Yeah, no, it's a total online business. So I just moved. I was living in a cabin in the Shenandoah Mountains of Virginia for the last couple of years, but I was I was getting a little crazy living up there alone on 200 acres of land. So I moved out. I just moved to Austin, Texas last fall, and my partner Tyler, he's out here. And then AK, who's our other guy, he lives up in Michigan. And then Christy, him and his wife, they're just vagabonds. So he's a trader. He runs his family office and works with us at MO. And him and his wife just travel around the world, staying at different really nice Airbnbs for a couple months at a time. So not a bad.
Wow, that's awesome.
Yeah,
that's a good lifestyle. I have to ask about Austin because it's like the hipster cool place to live these days, right? Like there's just like everyone thinks Texas is
I've
far
heard
right.
Great stories from there.
Yeah, and everyone thinks that Texas is this right-wing bastion, and yet there's Austin, which is this little enclave of liberal hipsters, right?
Oh yeah, dude, Austin's got a little something for everybody. And it's definitely not like the rest of Texas. And that's not the rest of Texas is fine too. Like I like Dallas. Dallas is a great city. But I love Austin. So it's an interesting mix. You got conservatives, you got liberals, you got man buns, you got cowboy hats. You have a little bit for everybody out here. And it's just a great, barbecue and beer, on pretty much every corner in the city. So it was a good move. Awesome. I've enjoyed living here so far.
So when Austin City Limits or whatever that thing is, South by Southwest comes into town, do you split because it's like you get overwhelmed by all these just knobs, these from all over the the states and the world, or do you stay for it?
I stay home and I don't leave my house. So.
Oh, okay.
Yeah. City gets pretty wild those times.
I was about to suggest we go out there for that, but we wouldn't run into Alex then. For sure,
that's right.
No,
you don't go out. You don't go partake and go watch some good bands or anything.
No, you know what? I actually did go to Austin City Limits Well, that was actually the first week I moved out here last October, and it was fun. We saw
Oh,
Paul McCartney, Metallica, um, and I don't even remember the rest of the bands because we were having a lot of fun. But it was, yeah, I mean, that's a cool scene. I haven't done South by Southwest yet. I hear an interesting crowd, but definitely haven't made it there yet.
okay, so let's talk markets a little bit. Let's talk about energy. Do you think you touched on it at the end? I love the trade idea. Do you think that it's suffering, like energy equities, from the tobacco type story in that tobacco was one of the best performing stocks of the 90 or 2000s, was it? After, when everyone was abandoning it because of all of the supposed bad, kind of publicity around it, yet the stocks kept going up and up and up. Do you think that we might have a situation that's similar in energy and that the stocks are just dirt cheap, nobody wants to own them, and that's why we've done so bad lately?
Yeah, I mean, I'm sure. I think that's part of it, but I think that's probably more a bit of narrative because I think the majority of market participants care mostly about producers being able to produce profitably. So I mean, if they were making money, investors would be buying their stock. The problem is, like the last couple of years, I saw somewhere in a recent article, the like U.S. frackers, a group of them burned over $200 billion in capital over the last like 5 years because they're drilling a bunch of unprofitable wells, right? So that's just unsustainable. I mean, there was too much easy credit that was going into the space, and so you had a lot of these bad actors coming in, just giving the whole space a bad name, which brought down returns for the whole entire industry because which was been pretty awful if you're an energy investor holding these things long for the last couple of years. But now it's created, I think, an amazing buying opportunity because there's a bunch of garbage out there, over leveraged names that you definitely don't want to you don't want to touch. But I mean, there's also some real like extremely deep value names. So like I think you guys have had on Cuppy, right? So like
Yeah.
Yeah.
a couple of his holdings and stuff, like Sandridge, which is one we also own. I mean, there's a few of these energy names that they're trading. I mean, they have decent balance sheets, not a ton of debt, and they're trading at like low single digit multiples to their enterprise value on an
Okay,
EBITDA
so do you want to
basis.
share another one with me? Like, so we have Sandwich. Is there anything else that you would want
Yeah,
to share?
yeah. So in our portfolio, we hold Sandridge, we hold W and T offshore, which the ticker's WTI. We hold a Colombian full service oil and gas company called Ecopetrol, ticker's EC. And then that's the straight plays on it. There's another one that's a small value cap that our value guy found, which is called Target Hospitality, which is a really interesting micro cap, deep value micro cap that caters to setting up basically housing for all these oil and gas workers. And so that's the ticker for that one's TH, and that one's also trading at just an incredibly deep discount. So
That's
yeah,
yeah.
like
No,
if you look at
that's
all,
listen.
yeah, go ahead.
No, I was just gonna say, like, I'm completely with you on this. Only thing that makes me nervous is that all three of us like it. Uh,
Right. That's
But you know what,
probably
though,
not a good
most
sign.
people don't like it, Patrick. It's one of those things because if you look at it, I completely agree with Alex's analysis that they're not making any money right now, so nobody's chasing it, and that's
yeah.
the long and short of it is like tell
And
me who
in
wants
Canada,
who.
we have so many of these. Like our energy space has been just destroyed, right?
Yeah,
Like
and listen, Patrick, you and I like it, but don't forget, we're Canadians. We always like oil and gas names, like or at least that's how I feel. I'm always a little partial to it because we've seen wealth created over the years, and so we're always a little more willing to go down that road. But like Americans, you go talk to an American fund manager, they're not going to be owning oil stocks. Like they're going to be like, why are you touching that when I can buy Google or I can buy, Facebook or
yeah.
all these other things that are growing. So the reality is that yeah, maybe there's some wackos like us that are picking away at these names, but they are not loved names. And in fact, I think they're being shunned. And maybe Alex is correct that they're being shunned more because they're not making any money as opposed to the fact that they're dirty. But I do think that the dirty part of it is an added kind of headwind that they're facing. that this next, millennials, they just don't want to tell me what fund manager is going to want to show an overweight in oil and gas that is already kind of from a societal point of view on the fence, and then to top it all off, it's not making any money. It's just like a shitty business for them. There's just no reason. Sorry, go ahead, Alex.
Didn't the Norwegian sovereign wealth fund recently announce that they're going to cut all oil and gas investments going forward?
Yeah. Right, that's correct.
Right.
They're just taking up.
I mean, that's what, like a $1.2 trillion sovereign wealth fund.
Right.
Yeah, but I mean, they might be particularly overweight.
No, but I don't think they were.
Yeah.
I don't think they were underweight, but I don't think they were stuffed to the gills with oil, because the reality is that the reason that wealth fund existed in the first place was because they had gotten rich from the offshore stuff.
Right,
so I don't think that they were overweight oil energy by any means, but maybe I'm wrong. Maybe, if anyone knows and can pass it on. But regardless, the fact is that they're selling it, Patrick. So, it doesn't matter if they're overweight or not. They're still selling, and that's more supply. So, yes, we like it, but most people don't like it. Most people won't be buying those names.
The one thing that I struggle with in this, and Kev, me and you had this conversation numerous times, including on a couple different recordings. And Alex, you can certainly give your opinion on that. But I think the space is ridiculously cheap. It represents value, but it also lacks catalyst for an immediate turnaround. And this is where we were talking about the idea of harvesting theta through the fact that some of these things are trading so cheap and selling premium out on these things. But because something is cheap, it doesn't necessarily give it the immediate catalyst to start turning around. I mean, Alex, do you see a catalyst? I mean, clearly you think that's cheap, but is there something that you believe is going to drive, let's say, in this 2019 calendar year? Do you think that something could emerge? I mean, maybe I guess an Iranian war and oil going to 150 could do that. But beyond, I guess not beyond, but I mean, that's one of the catalysts that could occur. But do you think that this whole sector turns around this year, or is this just value?
Yeah, so I mean that's the question I've been trying to answer myself, and I actually do think that a war or military conflict in that region, where the Strait of Hormuz is with Iran, is becoming increasingly more likely, and I think that there's a good chance we're going to see it in the next year before the coming elections, because there's a lot of people in power who want to get a job done before they risk losing the chance. But I definitely want to make an investment into these names, hoping that happens, because that's not a reliable enough catalyst. But the biggest thing that I see right now, and I'm a trader, so I have a risk, I have a stop. So if these positions move too much against me, I'm going to sell out, take my losses, and I'm going to just wait on the side and wait for another technical setup, right? I like them because I think they're deep value, but I don't have the cojones like a lot of these straight value guys just to take a 20-30% drawdown on a position. There's just no way. But I think the most compelling catalyst that I see right now is just a bearish dollar. So another one of our big positions right now are short dollar positions. We're actually long the Canadian dollar, we're long the Swissy, and I think we're going to see a huge dump in the dollar over the next couple months.
Wow. That's far different than my position.
I like that. But can you actually,
because it's the opposite of your trade?
No, I don't. No, it's not true. I'm not long U.S. dollars anymore, Patrick. Actually, I could see very much, and I actually think one of the great trades, and we haven't talked about this very much on our show yet, Patrick, but I think owning FX vol is a great trade, great risk reward down here. To me, it's like owning FX vol 2 months ago when they were giving it away, and I think that the dollar has been in an extremely tight range over the past
it's crazy.
Little while. I think that something like the euro, if you go back, it's been 30 years, if you imply, it out from the Deutschmark and all that stuff, that it's been 30 years since it's been in this tighter range. So I think it's due for a move. And although I think it probably will be down, I just think that regardless, we're probably going to get a violent move. But before we go any further, Alex, you mentioned that you thought that there was elements within the administration that are pushing for military action before they might lose their job. Can you just go on about that a little bit? And I'd be curious to hear what you think.
Oh yeah, yeah, and I don't pretend to have any like inside information because I'm totally out of that field now, and I have been for a few years. But it's just I mean you take these people at their word, like Bolton, Mr. Mustache, and Mike Pompeo. These guys have stated a ton in public repeatedly over the last few years that they want regime change in Iran, right? And if you dig into who their connections and their political influences and donors are, you understand like why there's a lot of forces pushing this, because there's a lot of people in that region who don't want a strong, especially a nuclear power Iran, right? The big one is Israel, and from Israel's standpoint, that makes perfect sense, right? Because you're a small country, surrounded by a lot of enemies, and you definitely don't want another nuclear power there. And so, Trump is the Trump administration is the most friendly administration that's been in office for the last 10 years. And so there's a lot of people who are concerned that if he doesn't get reelected, which, it's definitely not looking like a lock, that they're going to miss their window. And so that's why you see a lot of this. We're kind of doing a lot of provocation, right? We're putting the clamp on Iran's economy, not letting them bring their oil to market. And we're just poking a hornet's nest, hoping that they're going to come and sting us, because then we could go, say, oh, well, we have to respond because they instigated. And that's not like, this is just how the world works, right? I mean, this is how things get end up happening. So, yeah, I mean that's just basically, and that's all the info I have on it. It's nothing like super insightful.
Yeah, I've said this for a while actually, that if you were looking to hedge a market risk right now, I would be more inclined to hedge it with out of the money calls on the crude oil than I would on out of the money puts in S&P. Like
Yeah.
I think the chances of $100 plus oil are much higher than people are assigning.
But the implieds on oil are not cheap, dude.
I know, but I just think that if you're betting that crazy outlier move, anyways, it's not like stock market's cheap, bud.
No, but I like your FX vol trade idea much more than trading some like honestly, like when you're talking 30 to 40% vol premiums on oil. This shit's already being priced in, unless you're like banking on a doubling in oil price, which I guess it's not out of the realm of impossibility, but I mean you really have to be. That's what you have to be betting on, right? Like you have to.
Yeah, but I think it's more than I'm betting on it. It's more than I'm hedging for it.
Yeah, no, I understand.
And that's what I think. I think that there's more of that chance than anybody thinks. And Alex's narrative in terms of what's happening is. Makes sense. I've been confused about why Iran keeps pushing, and I guess you might argue that America's pushing the other way too. I'm not really sure who's pushing who more. All I know is that the tensions keep going up, and it just doesn't look to me like it's going to get solved overnight. And I think that the market is kind of whistling past the graveyard in terms of ignoring this risk. And think about this, Patrick. How long has it been since we've had any geopolitical risk actually affect the market?
It's been a while.
Yeah. So Alex, before we go, I think you had a third trade, wasn't there? You had gold, oil, and wasn't there something else you liked? Was that wrong?
Yeah. I didn't include it in the presentation, but just long shippers. So I mean, it's just another
the cuppy
basic
trade.
Yeah, cuppy. Yeah. So I mean, like him and I ended up like we both went through our books, and we ended up owning a lot of the same stocks. But yeah. I like certain shippers. It's the whole. I mean, Cuppy's laid out the thesis better than I can. But you have IMO.
He's long Scorpio, but the Sting. But is there another shipper you like more than that one?
That's one of our favorite. We also like Diana Shipping, DSX. And then there was a recent spinoff that from CPLP Capital Partners. Which is DSSI. And so, I mean, there were much better values, a few months ago than they are now. But, I still think like if the shipping cycle is going to turn, and this is kind of all connected to like the oil trade and the short dollar trade, because these things tend to move together a lot of the time. then some of these shipping stocks can re-rate a ton, and the upside is just it's wild. So
So, Alex, why don't you tell me the story on DSSI? Because I know over the years I've watched spinouts occur, and they seem to consistently surprise the market, because the only reason that they get spun out is because the market hasn't appreciated how good they are. And I've often found that once they go off on their own, they do really well. And I think I've seen studies that show how good spin-offs do in terms of in assuming this is what's happened, that it's been a wholly owned subsidiary that was in another company that then got floated as its own company. Is that correct?
yeah, yeah. So yeah, I mean, because so it's Diamond Shipping, DSSI, and it was originally
Right.
part of CPLP, which I think is a Wilbur Ross backed shipping company. Who's the Commerce Secretary,
Right.
and I mean, this was one that our value guy found. He did the real deep research into it. So I'm only familiar with like the superficial stuff. But yeah, I mean, it's a big. They have a big modern fleet, 68 tankers. They had a NAV when we invested of roughly 700 million. All their ships are super young. I think less than 8 years of age, so they have a young fleet. And I mean, yeah, like
You
I don't know,
like it.
man. Like
You
I
like it.
don't,
That's all that
I
matters.
yeah, I don't know all that stuff off the top of my head. I'm trying to.
Yeah. No, I don't mean to put you on
I
the
like
spot.
this
I think
stuff.
it's a
Yeah.
great story. Like, and I see that they're all going. They're running like they stole something. Like they were just shoplifting at 7-Eleven.
Right.
All three of them. And like you go look at like the Sting. I see that it's breaking to a new high. So Cuppy must have a big smile
Yeah.
on his face.
Yeah.
Oh no, he started selling like last time we had him on
He's
3
a
weeks.
true value guy. He's like, oh geez, it's gone up 20%. I better sell it. He's
No,
worse
the
than
problem
me.
is it's too big of a part of his
Oh
portfolio.
yeah, that's right. Because he probably put 50% of his portfolio in it, and then when it goes up 40% or whatever, it's like, oh, I got 80% of my portfolio in Sting or whatever. But I think these things could go a lot further. Like they could run a lot more if you go kind of step back. It's a bigger story that should take a long time.
And I think like one of the things you have to watch when you're looking at the shipping industry. I mean, now you have a bunch of catalysts that are coming up with IMO 2020, but also it's if you look at the majority of goods that are transported around, especially bulk dry shipping, it's iron ore, right? And the largest consumer of that is obviously China. And so if you look at like iron ore prices, which are highly correlated with Baltic dry shipping rates, and then both those actually have a really high correlation with China M1 money stock numbers, right? So if we see another credit impulse out of China, which I think we're gonna get sometime in the next 6 months, because they're due for one and things are slowing down really bad. I mean, that's just going to be another short-term catalyst.
Okay. Well, you got it. So listen, thank you very much for joining us, Alex. It's been a pleasure having you on. One last time, why don't you tell people where they can find you and kind of give them all the lowdown about what the services that you offer and where they can kind of learn more about you guys.
Yeah, sure. Yeah. So you can find me on Twitter at macro ops. That's MACROOPS. Or you could just come to our website, www.macro-ops.com. And yes, shoot me a message on Twitter. Hit us up on the website. Come say hello, check us out, and it's been a pleasure talking with you guys.
Well, thanks a lot.
Alex, thanks
and
a
the
lot.
next time
bud.
we're there for South by Southwest, we're gonna look you up, buddy.
Sounds good, man.
And if you're ever in Toronto, you make sure you come and have some beers with us.
Right on. Yeah, we'll do. All right,
okay.
guys.
All right.
Thanks again,
Thanks,
Alex. Take care,
Yep,
bud.
thanks.